Okay, well, welcome Graham, Kyle, Mark, and our silent partner, John. Thank you so much, Glasshouse team, for just agreeing to do this review of your Q2 earnings report, which I really appreciate. I just want to give a disclosure before I start that I'm a private investor, and outside of being an investor in Glasshouse, I have not been paid or compensated by Glasshouse. I happen to be very bullish on the stock, but I want to also give the disclosure that I have been wrong a lot, and I'm trying to learn and trying to get better. But this is just a caution to please do your own research, do your own due diligence. Don't just depend on my views or what you hear in this. And that's my kind of disclosure before we start. I'm a big believer in what Glasshouse is doing. Just before we start, in previous times before we review the Q2 earnings, I've described why I think Glasshouse is so important and why I'm so bullish. And it's mainly because I believe, and now I think the evidence is so clear, and I've rarely seen a company actually that has such an advantage on the cost side to produce premium quality cannabis at the lowest possible price. And I believe that a lot of the problems in cannabis stem from the problem that companies are trying to build business models on $50 or $60 eighth in limited license markets, and they're not focused on trying to drive down prices to the lowest possible point for medical patients and cannabis consumers, and that you're creating production in places that you shouldn't be producing cannabis. You shouldn't be, whether it's for the environment or for cost, you shouldn't be producing cannabis indoors in South Florida in July and August. You shouldn't be producing it in indoors in Massachusetts. That is so that in the winter, where it represents 10% of the electricity grid, it's terrible for the environment. The costs are outrageous. And what we're seeing in the broader cannabis market is a lot of companies struggling because they have built models that require very expensive cannabis pricing to the consumers. And on the other hand, you have companies emerging from a kind of free-for-all battle royale of unlimited licenses like California and Oregon, for example, where companies have been forced to compete on quality and cost. And so that brings us to Glasshouse, and what Glasshouse has been able to do through experience, through trial and error, but also through kind of a unicorn, or what a competitor described as the Ferrari of greenhouses, located in the perfect environment to grow cannabis. They have been able to achieve costs that no one else has been able to produce. And what Glasshouse, we're now entering the first year that they've been growing and selling, is that we first saw it in Q3, where they were able to announce a 41, 42% gross margin in wholesale, while other companies were announcing negative gross margins at the lowest cannabis price in California has ever seen. And now we get to this quarter, and we're now seeing 61% margins, and we'll go into that. They should climb from here, which is amazing. And so, but part of the bull thesis is hard to understand. Is we're going to dive into the unit level economics. Why it's important is Glasshouse is only using 20% of their capacity. So the incremental returns, the incremental IRRs, because it's a fixed cost business, everything drops to the bottom line. That's a big summary. Welcome, guys. Are you ready for my questions? Do you have any comments before I start?
Keep going.
Thanks for having us.
We're Graham and I are liking what we're hearing.
Yeah.
Okay, great. Okay, great.
Except for I'm a large owner and I've been wrong. That's
No, not wrong on Glasshouse. Well, I started early. I was early, but I'm pretty well at
we
Glasshouse.
appreciate it. We don't take ourselves too seriously, and
I'm
it's
wrong
like
on
you're saying,
other stuff.
hey, I drove every other rental car into the ditch, but I just rented one from Glasshouse.
Yeah, that's right. That's right. Well, hopefully it's not that. I'm a better driver now, really. No.
Now's the time to get involved.
Yeah. So clearly I'm bullish on Glasshouse, but even I was shocked at how good your quarter was. And when I say good, it wasn't that you just suddenly magically started producing tons of net income. But, I know what you're trying to do. You have this 5.5 million square foot state-of-the-art facility. You're slowly turning it on. You're only using 20% of it. So there's this incredible optionality as you turn it on. But I was shocked, one, because, Lowell, a competitor, a publicly traded competitor, announced negative gross margins. We have over 20 million square feet of cultivation that's gone out. We've had disappointing cannabis reports over and over. And it's a very difficult environment, but I first want to touch on production. And what I want to understand is I was shocked at the sequentials, like 115% increase, sequential increase in production, 311% year over year. What happened in this quarter specifically that production was so much more than expected?
Yeah,
well, you're looking at him. His name is Graham Farrar.
Do you see the smile? When the sun doesn't shine, I just no.
Don't talk about the sun shining shaman that you hired to help through it.
As you mentioned, it was a challenging quarter from a weather point of view, but the team did a really good job dealing with that. It's also worth, I think, noting that this was really the first full production Q2 that we've ever had, right? And so one of the things that we're working on is trying to be conservative so that we can hit our estimates and then beat them. And so as we forecasted this, we forecasted based. It was still we didn't have actuals yet, right? If you think back to when we started, we brought our first plants into SoCal in March, and that was so they were still predominantly in the nursery. So we really didn't have full production going in our flower houses. This was our first Q2, and the teams made amazing strides in what they've learned about the greenhouse over the last year. So when we did our forecasting, the team was able to beat that, even with what we saw, from Mother Nature with a lot of clouds and rain and low lights. So really, it's a testament to the team and their operations and the efficiencies they've made. We also had a few process improvements and increases in timing efficiency. So one of the benefits of that is by getting more efficient, things got done quicker. So we also pulled in some of the production that would have typically finished under our old process in Q3, now finished in Q2, which is a fantastic improvement in its own right. It also bolsters Q2, which is part of the reason, as you'll note, that we forecasted a fairly flat, or perfectly flat Q2 to Q3. Typically, you'd see more of a Q3 seasonal bump. And what we're saying basically there is that we shifted some production from Q3, finished it with a more efficient process in Q2, and still expect to be able to produce kind of the typical Q3 that you would have seen. So I'd say, testament to the team, testament to the improvements they've made on the post-harvest process, efficiency, timing, and makes us really excited to see what we can do when hopefully we just get kind of the normal southern sunny 72 that you expect through August and into the back half of the rest of the year. So, it makes us pretty optimistic on what we have in store and particularly what SoCal is capable of.
Hey, Graham, the other thing I think it would be worthwhile to elaborate on too is this was the first full quarter we were utilizing the new processing pack house to that area. First full, I don't know. So I think I should talk about some of the benefits there.
Yeah, it's a great point, Mark. So we built what I think is probably the most advanced drying and curing facility in cannabis, certainly the most advanced one that I've seen or I'm aware of. We call it Pack House 2. It's in the kind of the back half of the property. And what we did there is we really, kind of clean slate design what we thought was the ideal way to at very high quality and very consistently and very efficiently dry and cure cannabis at scale. And so that pack house now is fully operational. All the product being harvested out of Camarillo is going through it. One of the things it allows us to do is have a much tighter control and consistency on the moisture level of the product. Typically, people use relative humidity or moisture levels to cure cannabis. It's actually not a very precise way to do it. If you look at what the state of California actually does in their testing, they don't pay attention to moisture levels. They pay attention to something that's called water activity. Water activity is what you would use in a pharmaceutical and food safety point of view, and it's a much more precise method of measuring moisture. And so one of the things we can do with that is that we can prevent the typical over drying of cannabis that people do to just be on the safe side of making sure that the product's not going to mold. And we can actually run a much more precise testing. And one of the benefits of that is that we don't over dry the cannabis, which helps with production and helps with quality at the same time, which is a double win.
I've taken a number of tours over time and watched the construction. And I watched, as you've given me the tour and the different stages. And I think my last tour, I forget when it was, maybe 5 months ago. And you were like, it was done.
Yeah.
And you were showing me it. And I was really fascinated because you were talking, you told me this on the tour that people were over drying. And I've heard from other industry professionals that there is huge productivity gains to be had in post-production and about the moisture levels. And it's just so gratifying to see the initial seeds of those results. It's one thing to say, oh, you got this great greenhouse and you got a robot and you got the tall roofs and you got but now you have kind of a state-of-the-art post-production facility and harvest and drying, and it's really going to be fun to watch, because I know you're running a million experiments about what strains you can dry at this level.
Yeah, one of the really cool things about the facilities is that we can store the recipes. So over time in the dry rooms, we can actually develop strain-specific recipes. We use I don't want to give away all of our secrets, but we use a 12-day dry, which is much longer than most folks do. And every single day, we can actually program in the dry down and the fresh air exchanges and the temperature, and we don't actually use relative humidity. We use absolute humidity, which is a measure of grams per kilogram of air. And we're seeing the feedback. A lot of what we sell goes to brands and processors who then do things like, put it into other products and package it and do pre-rolls. And we've heard the feedback that they really like working with our weed because it's consistent, right? They don't get a batch that's, turns to dust as soon as they crumble it. They don't get a batch that's then so wet that it gums up their machines. They can, kind of tell us how they want it. And every time they get it, it's exactly the same. And so as they calibrate their downstream processes to use our material, they can count on it being the same, batch to batch. And that's still pretty unique in this industry.
And I think that's one of the things that I've identified as an outsider looking in, is there just isn't a consistent supply chain in cannabis. I've told other investors and my own investors that I think we're starting to get to cannabis 1.0, which I believe is the supply chain, which is that you have consistent, high quality cannabis at a consistently low price. And you have these weird situations because every state is its own country that you really haven't had it. And what's really exciting to talk to you about, but also see you deliver, is to bring a precision agriculture and a technology kind of mindset to cannabis farming, which hasn't really existed that much.
Yeah, I mean, one of the things we've been preaching since 7 going on 8 years, day one, it's a mantra that hasn't really changed, which is quality, consistency, and cost. Right? First, it's got to be good, then it's got to be good every time, and then it's got to be good every time efficiently. And that's 8 years in, we're still hunting that. That's the kind of goal that you never, the destination you never reach. But incremental, continuous incremental improvement is the most powerful force in the universe, in my opinion, and that's what the team works on every single day.
And Aaron, I think another way to look at this is let's remember this is a brand new industry that the chains are still on all of us. Apologies, Long Beach. Because it's still federally legal and everyone's doing stuff in different states and everyone's looking at cannabis a different way. But if you use history as a guide, some of the best cannabis in California is basically still handmade. People are out there hand watering. They're growing these beautiful Christmas trees up in the Emerald Triangle. And nobody has really said, because now we are pretty legal as far as in the state of California, we can go ahead and do it, and the feds are allowing us to do it. So now, instead of these hand-built Rolls-Royce, Ferraris, cars that are still largely hand-built today, when we sit down, it's almost like talking to Henry Ford saying, okay, Graham, team, how do we do this at scale? How do we build the Model T and just put it out there so the masses can actually enjoy this? There will always be Rolls Royces are still made as they were. There will when the folks can sell the Rolls Royces out of the Emerald Triangle, they're going to kill it. And right now, what we're doing is what most companies aren't doing. In fact, I don't know anyone else. We spent many millions of dollars on that post-production that you saw, and we had lots of debates about it. But when you can spend the millions to really cut that price down and improve the quality, it's if you can afford to do it, you do it, and we did.
It's actually funny that Kyle brings up. I've been reading a lot about lean manufacturing right now, and I actually think that the automotive industry is one of the best parallels that I've seen to cannabis so far. In that, it started out with everything was craft, right, and 5% of the population had access to a car. They were all handmade, right? Not so dissimilar if you go back to the early days of Prop 215 when a pound of weed cost $4,500 or more, right? Fantastic weed grown by hand, someone tending the plants each and every day, but almost nobody could get access to it because it was too expensive and there wasn't enough of it. And then next, about kind of 1908 to 1925, Henry Ford came in with mass production, and the impact of that was all of a sudden lots and lots of people could get access to it, but there was very little variety. You had to be able to fix your own car. It was still a very kind of do-it-yourself model. And then the next phase was Toyota, and a lot of what those guys did, lean manufacturing, where now you bring the best qualities of craft together with mass production, and so you have variety, you have it tailored to the consumer, but you have less defects, higher quality, and you still do it at a price that's accessible to everybody. So I think that's the path that we're on, is kind of moving from that, craft mass to lean production, and that's actually the real panacea for the consumers, is to have what they want at a price they can afford.
Remember, every dollar we save in COGS goes to the bottom line. Like, it's that simple. So if we can continue doing that, or we make our prices a little bit cheaper and it gets more and more to the masses. So there's a good trade-off every time we find some incremental savings. And we think there's a lot more between us and the consumer that we're going to be able to accomplish here.
And one of the things that I think about, which is so just long-term as a win-win for everybody, is there are many, many medical patients in many states that would love to have access to low-cost, high-quality cannabis and don't, because of the interstate commerce restrictions. And it seems crazy to me that we have enacted a system as a country so that some people are being gouged. But that's just a side note. I want to go. Yeah.
One of the craziest things, the fundamental disconnect, is we talk about cannabis as medicine, which it is. It's medicine so good people take it just for the side effects, but then we tax it and regulate it like it's a vice, right? And I think that if there's a fundamental thing that underpins a lot of the weird, inappropriate stuff we do, it's that, right? This is a beneficial thing for society and for people. Yet taxes are supposed to disincentivize people from doing things. And we put, excise tax on a bottle of wine is 4 cents. Excise tax on a 1 gram joint's $1.40, right? So that's, if there's something to fix, getting people out of prison, and that would be at the top of my list.
Did you see, by the way, the study that came out this morning that was reported that health insurance premiums like 6-7 years down the line are much lower in legalized cannabis states?
No,
That
that's
there's this
amazing.
long-term effect where this is I'm just diving right into your plants over pills, but like people stop taking pharmaceutical pills, the insurance companies stop having to reimburse, and the cost to every consumer goes down. Who would want that? That sounds terrible.
UCLA just did a study where they actually showed that people were using cannabis to deal with their opiate cravings, and so therefore consuming less opiates. A federally funded study, real science.
And Aaron, when you see some of the biggest haters out there that are, like Fox News, when you start looking at it, and so I'm listening to the arguments against, and then I go, so I'm listening to like Laura Ingraham, blah, 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 blah. And then all of a sudden cut to commercial. What am I seeing? Oh, pharma, big pharma, lots of big pharma. There we go. Oh, a little alcohol too. Awesome. Yeah. There you go. Keep speaking out about cannabis when all the studies are showing it's a net positive. Not everyone, but almost.
Yeah, that's right.
Yeah. And so I'm glad that she's not conflicted, or everybody at Fox News and everybody in the media. I love that Sanjay Gupta and Anderson Cooper went ahead and they came out to our farm. They spent a lot of time with Mama Sue. We're super proud of what she did. And what she did is what she does, which is talking to seniors and getting them off of a lot of their medications. And who doesn't want that besides Laura Ingraham and her, her funders.
Yeah. So I got us derailed. That was my fault. Let me go back to production. So I don't know if many people realize that in May and June, now we had bad weather through the beginning of the year, but in May and June, we had particularly dense cloud cover, fog in Southern California, especially Santa Barbara and Ventura County, much greater than normal. I was depressed. Lots of my friends were depressed. We were like, it was almost like a play because we're spoiled. Like this is like God's gift to the environment. Thank God it's like the same as normal now. But I personally was worried that we might have a repeat of Q4, that production was gonna really fall off in Q3. And so I'm really glad to see that it'll just be flat and even higher than I expected. But I wanna, how do you deal with 50% lower sunlight when that happens? And I know that we have, climate change, a lot of strange things are happening. How do you think about, because like I worry all your production is like at one facility. We saw remnants of the hurricane that never hits, and suddenly we had crazy heat in Q4. I worry about the weather. Graham and Kyle, how do you think about it? How protected are you, or how, who knows what will happen, but I'm just curious of what your thoughts are.
I think the best way to look at it is, and I know, Aaron, you've heard me say, do the best you can to control the controllables, and then do the best you can on the uncontrollables. The weather is one of those things where we just see what's coming down the pike. I would tell you that the combination between a very resilient and gritty team, led by Graham, but also we have a facility that that's the reason we're public. It gives us an advantage to deal with the climate. It's not perfect. The heat, as you mentioned last year, was a real toughie on us. But by the way, we learned a lot in that same heat. I don't think we have the same outcome. So I would just tell you that it's a good combination of people and the facility. Would you agree, Graham?
Yeah, absolutely. And it's part of the reason that we're big believers in the greenhouse or controlled environmental agriculture growing style, right? Is because we work with Mother Nature, I sometimes call her our dance partner. She gives us a lot of what we need for free at no financial or environmental cost, right? We get the beautiful ocean breezes and the sun. Even in low light, we're still getting that light for free. And then we have our facility, which gives our team a lot of tools to manage it, right? So all kinds of things are being reacted to when the weather changes like that. The temperature that we run the greenhouses, the way that we irrigate, the way that we use our shades, the way that we use our roof washing robot, right? Like when we apply a coating, typically our kind of summer treatment, where we actually apply some coating to the roof that causes more diffuse lights, prevents it from being, too intense when the sun shines like it normally does. When we see these weather patterns come, we flip that around, we get the roof washer out there, we scrub the glass crystal clear so that we can get every ray, every photon of light that's available into the greenhouses. So it's it's a very organic and structured and intricate system. And that's one of the things that our team does well is when Mother Nature throws curveballs at us, A, they have the skills, and B, they have the tools to manage that, as well or better than anybody else can.
But to your point, Aaron, there were a lot of texts, a lot of calls, a lot of discussion about, I'm sitting down here in Long Beach. We're on a team Zoom and it's raining here, and I'm like, how's it looking up there? And he's like, not great. And so we are super enthusiastic and happy about hats off to the team for utilizing the facility in not the easiest conditions.
And I want to, this is the really kind of like light bulb that went off is when Mark mentioned this in your prepared remarks, that it's not just, you didn't just have a one-time pull forward in Q2, but that you now believe, and I don't know if investors are fully processing this, but right now as an investor in my model, and what I was expecting is with your current production, you could produce 270,000 pounds. And you announced yesterday, hey, we now think it's 350,000, could be a little more. And that is kind of shocking to me. And I know you've talked to post-production, we've gone through that, but that it's not a one-time issue. But then you seem to indicate, which is wild to me, Graham, is that, hey, you're only here, this is only the first year. Like normally it takes 2 years. Is it possible that you're going to find even more ways to make this more efficient? Or is it, how should I think about that 350,000 pound number in terms of production?
Do we let Mark,
going forward?
He made the bold prognostication,
yes,
and is now being widely quoted.
This is one where I stay in my lane and I rely on Graham and his team. Graham has consistently said it takes 2 years. I think one of the things coming out of the gate, if you think about that original 275,000 pounds, a lot of it was based off learnings from Casitas and Padaro and an extrapolation. And in the first, 4 quarters we've been in there, we continue to learn. And I really think it's a combination. We really didn't know how much better the facility was than our existing facilities, plus a combination of the team that Graham brings. It's been great to see. Graham can comment on how much more upside there is. Hopefully we can, continue to eke out a couple % each quarter, because that flows pretty much 100% to the bottom line, right? There's literally no incremental expenses when you can increase your yield a couple %. So you're looking at, 90% plus flow through of whatever incremental revenue we generate from the yield.
Yeah. I agree with all that. And I guess to your question, Aaron, I do think we will continue to find more efficiencies, both in production as well as in managing our costs. Obviously, that won't go on, infinitely, right? There are upper bounds. One of the fun things about cannabis, particularly if you like experimenting and developing and learning, is, cannabis is a new crop, right? People have been growing corn at, in a commercial capacity for hundreds of years, right? Like corn is an interesting example. The way they keep increasing yield in corn is by breeding the corn to stay more upright so that they can get more plants per square meter, right? Like that's where most of the yield increases have come in corn over the last 20 years, is used to have big floppy arms, and so you could only get, I'm making the number up, 10 plants per square meter. They bred them to be more upright, and now you can get 15 plants per square meter, 50% yield increase. We haven't even started to get to that kind of stuff in cannabis, right? Right now, we are experimenting all the way through the process, and I mean, it's the combination of saving a few percent at each step, right? Whether that's figuring out how to harvest with less touches, whether it's figuring out how to maintain moisture in the dry rooms better, whether it's figuring out how to get a better, clone hatch rate so that we can cut less clones and need less moms and deliver, healthier plants. Like it's kind of yes and I would say where it's all the above, but I don't, I'll stick to the 2 years, and we're really just halfway through that. So I think the team's got a lot more that they're going to be able to show us they can do, especially with Greenhouse 5. I mean, we've already in our year of experience have identified some things that we think we can improve on from the first greenhouse we did, and those improvements will be rolled into the next one. And I think we'll start off there better than we started off in Greenhouse 6 for sure.
Moving to pricing, what is your current view on pricing or expectations based on what you're seeing?
And Mark can jump in here on this as well, but I think we saw a progression from what we consistently called destructively low pricing. I think the kind of the last 2 years prior to this last one were at prices that we viewed to be below almost everybody's cost of production, and so Econ 101 tells you that's not sustainable, especially in a capital deprived industry like we have here. And I think you can see that bear out in an objective way in the attrition of the licenses in the market. There's less licenses, which means less supply. And we've now, you can graph those licenses and the price per pound together, and it's kind of what you would expect: less licenses and higher costs. In many cases, ways, the price of cannabis has almost doubled over the last 12, 14 months. I think as per typical, when something goes up that fast, we've seen a plateauing and even a softening in the price. But in the range that cannabis is now, I think you'll find efficient producers can survive. It's certainly at a higher price than we built a glass house to be able to withstand. And I think there's a ton of benefits, right? There's so much focus on the producers that we forget that markets exist for the consumers and the patient and the customer, right? And so the idea that, as I mentioned, cannabis used to cost $5,000 a pound, right? Like, that's great if you can afford it, but then for everybody else, cannabis in there at $6.50 a pound, $7.50 a pound, like that's actually for everybody, right? And so I think the pricing that we're at now is good for us, sustainable for the efficient ones, and great for the consumer. Our goal is always, as we mentioned, is control what we can control. That's cost and quality. So our focus is there, and then prices do what prices do, and we'll see. It'll either be good margins, or we'll be clearing the market for further consolidation. And either one of those things is a positive for us.
So, Aaron, just the second part of your question too is there's a bit of a natural hedge built in terms of our average selling price. So when production is lowest in the state, which would generally be portions of Q1 through portions of Q2, the production is down, but for us, the mix of flower output is also at its lowest, right? So, and I'm going to use trim as an example. So in Q2, the amount.
Can I pause you for a second, just so that
Yeah.
I fully understand, and I understand, but just anyone listening or watching. Okay. And so if I understand correctly, in the winter months, you have less sunlight, so you have a less bust plant. So there's less of the actual flower compared to the rest of the plant. When there's more sunlight, better weather, you have a more robust, bigger plant flower. And so keep going. Sorry, I just wanted to make sure that was understood.
The high value portion of the plant, the flower and smalls, in the first half of the year, I mean, flower was selling anywhere at the start of the year to just on average slightly above 600, and then it moved up to, we'll call it roughly $750 a pound. Smalls showed a similar and have generally been between 400 and 450, 400 to almost $500 a pound. And trim, that kind of last piece, is down $25, $30, $35. So in the front half of the year, you're seeing the percent of trim. So I'll do the inverse, in the 50 to 55% range. And then as we move into
of the total biomass.
Of the total biomass production. So that in some ways weighs the price down because you sell a higher percentage. Now that we're moving into Q3, although because production in the market is up and flour and smalls prices are coming down, our output now is much higher. And so the percentage of high value flour in smalls is up 10 to 12% from where it was in Q2 as a percent of the mix. So that's how we can actually keep the average selling price roughly the same between Q2 and Q3, even though the market is compressing. And it's been really hard to understand the seasonal impact because of all the licenses that left in Q3 of last year. And the rate at which licenses are leaving is slowing down. So many of the marginal producers, I think, have left the market. But it's not unexpected to see the price decrease in this quarter because production across everyone, our production is up, but everyone else who's mixed light, outdoor is coming on. So the market has more production, which is driving prices down. But
we're in a more normal phase. Like the last 2
yes.
years was extraordinary, and then you had
Yeah.
just crushing prices falling consistently. And now you just expect winter months higher, summer and fall a little lower. And then, if you have extremes, obviously in any direction, you're going to either add production or you're going to subtract production.
Yeah. But and from our perspective, again, going into the math, if our average selling price is north of $300 per pound, right? And we did 340 and we're producing at $120 per pound, you're still at 60% gross margin. Right?
Yeah, we'll get into that. Don't get into that yet. No, we'll get into
healthy business.
So the other thing that's interesting is it's not just the commodity, but it's the quality. And I had heard something from a private cultivator that in the market, there's now a shift in perception that compared to other greenhouse flour, the flour coming out of SoCal from you guys is just better. And that you're achieving a higher price than other greenhouses. And this is from a completely third party, source. And I'm just curious, is that consistent with what you're seeing, or is that more strain specific? Are you starting to see that you're able, whether through post-production, what you were talking about, the quality, what you can deliver to customers, that you're kind of achieving some differentials just because of what you can deliver to customers?
I mean, you're definitely making me smile with that comment. So, I'm happy to hear that the market is saying that. That's certainly our goal. Always has been. We've been big believers that, if you think about the kind of historical or, traditional indoor greenhouse, outdoor quality ranking, it doesn't, how something got to be what it is shouldn't be the defining factor. What it is should be, right? And if you think about indoor to me is shorthand for good climate control on lots of light. And our greenhouse and where it's located, the goal of it is good climate control and lots of light. So we've always believed that we can grow a very high quality product consistently with the tools and the team that we have. So happy to hear that people feel like we're doing that. Our goal is always to kind of, make our best today or be our worst tomorrow. So as the team gets more experience and learns, and we tailor our genetics better and better for the facility, I think we will continue to see that happen. I do think that, one of the things I see is we've seen people claim that their flour is glasshouse flour when we know it's not, and I take that as a huge compliment, because if that's what someone says to help sell their product, then that means that we're doing something special. So happy to hear your comments as well and support that. And I think we're going to keep going. We should be better tomorrow than we are today over time.
Well, going now, Mark, to gross margins, and my calculations may be off, but when I take your Q3 guidance of $340 sales price and $120 COGS, I come to a 65% wholesale margin. A comment is cannabis investors are hearing bloody murder by $1,000 to $1,500 per pound cannabis pricing,
right?
We're crushing profits and margins, and at $650, $700, $750 flower prices, you putting up 65%. I mean, you're getting close, and especially if Q4, you could pop the production. There's no weather issues or whatever. Like Q3, you're going to approach 70%.
Right.
Those are, I'm just curious of those are like software margin. You're starting to approach software margins for a commodity business. Am I off of my calculations? I mean, it's just remarkable to me.
So I don't know if cannabis is the new software, but no, you're thinking about it properly, right? I mean, the best way for an investor to look at the company, at least the wholesale business, is the easiest way to do the gross margin calculation is, I mean, we're pretty fulsome on average selling price and what we think the cost of production is, and do the math just like you did it. 340 minus 120 gets you to $220 of gross margin per pound, which equals the 65% you highlight. Now, every quarter isn't going to be precisely that, because there's always some timing and movement in and out of inventory, but directionally, that works really well as a way to gauge and help anticipate where our gross margin should be. And again, the beauty is, as we produce incremental pounds, it has an even higher flow through, because the cost of producing that is not one for one. There is efficiency of scales, right? Graham and his team have driven the monthly spending cost down. If you do the math, it's around $4 to $4.5 million per month to run our 3 farms, right? In terms of what we're throwing through gross margin. And so if production ramps up 10%, I would not expect our cost to go up 10%. So our cost of production does go down as well.
Gotcha. And the reason I obsess about it is that you're only using 20% of the capacity of Camarillo, and that this is a fixed cost business. As you mentioned, it just falls to the bottom line. So the COGS become very, very important, because the incremental SG&A outside of just some taxes or a couple more people, it's just not that great. And so for investors like me, once I understand the unit level economics and the gross margins, everything falls to the bottom line. You're about to turn on Greenhouse 5, which is an additional 1 million square feet. Can you give me a status update of where you are? You started construction, you started ordering, like what's the timeline investors can expect on turning on the next greenhouse?
So we have started construction. We've got initial orders placed. Kyle did an amazing job raising money in an amazing different climate, so that I could write checks and they wouldn't bounce. So the team's on it. There's greenhouses have been cleared out. There's tractors and digging ditches and laying irrigation lines and electrical lines. Orders are placed. Things are being fabricated in Holland, where most of the greenhouse equipment comes from. I think our target right now is to get plants in the Greenhouse 5 by the end of first quarter, and then have revenue from that by the end of the second quarter. So I think that's generally where we're pointed right now, and I think feeling good about that. Again, nice thing is as compared to the first time we did this, we've done it once. So we do have the extra work, of course, of operating what we operate now and then layering this on, but we've got the added benefit of being down this road once before and being able to learn things and apply those learnings to what we're doing here And again, the team's not walking in the facility fresh like it was last time. So we get to leverage all that, which is pretty exciting.
And so if I peek out, I'm not asking for guidance, Mark, so don't get too nervous. But if I peek out into 2024, how should I think about the COGS of Greenhouse 5 and then the COGS of the larger of both greenhouses together? You're projecting the back half at like $120 COGS. How should I think about it? And the reason I mentioned this is that you've talked about, Graham, in the past, that you thought you could get COGS to $100 or less. And I'm just curious how does that work as you turn on the greenhouses in production?
How does it work?
How should I think about 2024 COGS on a run rate when both greenhouses are up and running?
Yeah.
What
so
efficiencies happen, or what
Yeah,
do you hope to happen?
Yeah, I think our long-term cost target of $100 a pound is still where we're focused. I think that team's been doing a great job consistently putting up record low cost quarters, at least on a quarter by quarter basis. Q4 from last year at 127 is still our all-time record, but Q2 at 139 is definitely a Q2 record by a large margin. Feel comfortable on the back half of the year being 120. Next year with the new greenhouse, the first half of the year is really going to be startup stuff, and we're not the quarters that we typically see the lowest prices. So, I don't know what's going to happen in 2024. I'm not sure that I would say there's going to be a massive cost efficiency impact to the second greenhouse. Maybe getting into the back half of the year when the thing's really rolling and we're into our lowest cost quarters, we'll start to see the benefit of that. But certainly we see a lot of efficiency on the startup and the operations. I mean, there's a whole bunch of site prep that we did that we had to do for the entire site. An easy example: you had to fence the whole thing in. You had to put an odor control system on the whole thing. You had to set up security and perimeter, security systems to meet the regulations for the entire property of 165 acres. Even though we were only using 1 or 1.5 greenhouses out of the 6, when we add the second greenhouse, we are not going to spend $1 on the fencing, right? So there's a tremendous amount of kind of operational startup leverage that happens from a CapEx point of view. And then again, we have so many. We've tried and discarded 4 different growing mediums, right? We're not going to have to try and discard those again. By the time we put this in, it'll be at version 3, 4, and 5 of a lot of our operational operational protocols as we grow into greenhouse 5. So we'll be, however the right way to say that is, we won't be starting from square one. We'll be starting from square 15, which will give us a running start into getting even better.
Gotcha. And you said that the new greenhouse could add about 80, if it's 250,000 pounds, it's about $80 million in sales. And like $30 million in ebitda. That's obviously on top of existing ebitda. If I just take more of the general, what this quarter, next quarter, Q4, and kind of say, hey, this is generally the run rate of the existing business. And Mark, I just want to make sure I'm not off base. And I know sales can change. You could have weather, you could have a bunch of stuff. But when I just think about when that greenhouse is up and running, I'm kind of getting a roughly of the 2 greenhouses at 40% of your capacity turned on, like 75, 80 million in kind of ebitda. Am I in a ballpark correct of how to think about the run rate of the 2 greenhouses together, all things considered the same?
Yeah, I would. I think you're a tad high, but you're in the ballpark, and
I'm in the ballpark. Okay.
The simple way, like this year, our business should be, 30-ish million in EBITDA when you consider flat Q1 and 10 million, and we've kind of guided to similar. So you're at 30 million plus 30 million from this new greenhouse, puts you in the 60 million range. And again, I would expect us to continue to find ways to improve the operation. And I would certainly hope, again, we can, given what Graham mentioned, I'm hoping we can do better than the 30 million.
Gotcha.
In
Got it.
I mean, I would say even at 60 to 65 million on, if you do the math, you'd be in the $250 million of revenue. If you just took 80 on 70, you're pushing almost a 25% EBITDA margin. So that's still really healthy.
At 40% capacity utilization.
Yeah, and then it just continues to get better from there.
Gotcha. No, that's really great. Shifting to fundraising, Kyle, amazing. I don't know if people fully appreciate just how hard it is to raise capital in cannabis. There is no capital, very, very little. You've raised the latest round, the preferred equity is 15 million. For disclosure, I'm participating in it. It's a 15% cash interest and then a $6 warrant. This is obviously an improvement over the other preferred, which I invested in, which I still think is the best piece of paper I've invested in since I was on the courthouse steps in Atlanta, Georgia, which was a 20% interest, $5 warrant, but there was a part that was the compounding, so it was higher than 20%. So despite interest rates going up, your cost of capital has come down. You raised 15 million, and it's coming in, and I had to get a new bank account for a new partnership, so I'm delayed. I'm sending the money this week, but I wanted to ask, besides just congratulating you, I think you mentioned on the conference call that everything else being equal, you think you can fund the rest of the expansion from existing cash flow once everything's running. Did I hear, if you wanted to, did I hear that right? And generally, how do you think about your balance sheet and cash flow needs kind of going forward?
So number one, thank you. That was very kind of you to say. I would tell you that, I've been raising OPM or other people's money as my partner since 1996, back when I was pushing a police car around, so it wasn't even full time. But like you, Aaron, I'm an investor who likes to come in during distress times. And so the easiest time to raise money is when you shouldn't be raising money. When everybody thinks it's a genius time to buy real estate is not the time to buy real estate. And so the time to buy it is when everyone's like, oh my God, everybody's fearful. And that's when I'm typically greedy, to use Warren Buffett's. The thing I'm most proud of this one, last year we were not cash flow positive. So the risk to the investor was that we...
But it's beyond that. I actually have thought about this, and I was thinking about the incredible risk. You hadn't proven that you could grow in it. You didn't prove that you could grow it at the cost you could, and you couldn't prove that you sold it. And that's why I was so wildly excited after Q3.
So 100%. There was a lot. And the other thing was, I remember, raising money in Africa, calling Graham going, we need to sell, we need to continue to ramp up our sales to hit numbers we've never hit before. And so we were even calibrating while we were raising money, but we felt very confident that we were going to be able to do it. But yeah, because of that, we had to pay more money to incent people to come aboard on that 50. This year, we'd already shown we're free cash flow positive. We're already shown, now we're just looking, this is growth capital. So even though the interest rates are higher in the United States this year than last, we've gotten absolutely no movement from the federal governments, which has, made things harder for cannabis investors. We had, this was actually not a hard raise. We hit the cap pretty quickly. In fact, I had to put the brakes on. We hit 14, so we didn't accidentally go over and upset people. So we're fully committed at 15. We have people that are hitting on me every day to say, hey, if there's an opening, can I come in? And so we're in a very good place. Our balance sheet is something I'm very proud of. We only have 50 million of debt. I know only sounds maybe not the right word, but compared to what we own as a company and assets, it's a pretty small debt. And our debt holder, they've performed like partners. And so I know a lot of times there's an adversarial relationship, and that's not what we have. So I'm really excited and feel good about it. I certainly hope we don't have to raise any more capital. There always comes a price. The dilution's not huge, but that's the price you have to pay. And yeah, I'm hoping that further expansion, which we fully plan on doing, and we've got it in the timelines, will be done through cash flow.
Okay, great. And you made some comments on the call about opportunities presenting themselves to you. I don't know if it was in terms of possible M&A or what you're seeing. There's obviously a lot of distress in California. I talked to a lot of private companies, and people are trying to scale up or figure out in a very difficult environment, with distributors going out of business, with high taxes, with just a lot of pressure, and obviously, we just talked about no capital. I'm curious of what you're seeing in the California landscape and what opportunities are available to Glass House, and or what you're seeing. And then I also, as an investor, we just went through of how amazing your greenhouse is and the margins it's producing. And I just think about, like, how do you, to merge or to give up shares in something that's just so truly special, how you think about that as well.
So one, I would be remiss if I didn't acknowledge that we feel very, very fortunate at the position we're in right now, because California is very distressed. And there's a lot of good people out there running their companies, doing everything they can. They can't get a break from the federal government. The state government could certainly be a lot better. We feel very, very fortunate. On the other side of that coin, when we get approached, which is quite often, we know what works, and we know what our future looks like, as far as we're only 20% occupied for flower, right? And we know that we have 80% more, and we know what that can do as we turn that on. So taking our eye off that ball is not, that's where we spend 90% of our focus. The other 10% in considering lots of different options, whether it be brands, retail, distro, things like that. We'll always listen, but I think Graham said yesterday, 1,000 no's for every yes. I think it's just, we've got to be very disciplined in our approach. And quite frankly, we wouldn't be where we are today if we had said yes a lot more often in our early days. So we've just been very disciplined, and if it doesn't make good sense, I think whatever our stock is today, I think it's cheap compared to our assets and things like that. And so to take dilution, we have to think long and hard about it.
Gotcha.
I think just one addition to that, Aaron, too, is I think the bridge and the way that kind of the dichotomous ideas to hold that we hold in our minds, right, is at the same time we have all the challenges of California. California is still selling $5 billion of legal weed every year, right? That is the next 2 or 3 markets combined. It's probably a third of what California is actually capable of. If we got the access to the other 60% of municipalities that don't have it and saw, similar per capita numbers that Montana has, you'd be looking at, 13, $14 billion markets. So at the same time you have all that distress, you also have one of the most exciting and largest markets anywhere on the planet, right? And so bridging that gap, if you play that out to the illogical extreme, right? There's one company left in California. Well, they sell $5 billion worth of weed. If there's 10 of us, there's a $500 million worth of weed. All numbers that are pretty exciting for a state. And so, thinking about where can we use our operational excellence to play off the front foot, use what we've created as a platform, whether that's plugging retail in, management service agreements, other ways to use our biomass, right? It's still 1,000 no's for every yes, but it's looking to bridge and connect those things so that we can build and bring the products we grow to as many consumers as possible.
Yeah, no, that's great. Graham, you and Mark too, we've all been talking about both offline and online and between ourselves about the licensed capacity that has come out of the market. And you've had over 20 million. I think at the peak we were at 82 million, or might have been 84 off the top of my head, million square feet. Now we're around 60 million square feet that's licensed. It's slowed down, but part of this is that there is, by my calculations, you still have 19 million square feet that are provisional licenses. And as of July 1st, you can no longer renew a provisional license, and you have to become an annual license by, and I think there's an exception for the smaller ones. They have till 2025, but if you're a larger provisional license, you can't renew. I think that represents 6.5 million this year. And I'm just curious of how you think, Graham, how do you think about the number of provisional licenses that actually make it all the way through, and what process they have to?
I think it's going to be a small minority, and I wish the answer was different, because I think a lot of those farms have value to the consumer and offer it, but I think the regulatory framework is such that the farms, I mean, we're 5 years into this now, right? So what the math or the mental model is 5 years you've been working on this. You have a number of months now remaining. Are you going to get over that hurdle, right? Is there opposition that's trying to use it as a tool against you? Is there a county that's not supportive? Does the cost justify it in the current market? I would be surprised if it's more, if you want me to pick a number, I guess it's a quarter. And that may
25%.
Optimistic.
So in the long term, we don't know when, but you're thinking that of the 20 million, you may have another 10 or 15 million that drop out of the market.
The outside long term for provisional licenses is 2025. 0 provisional licenses will exist after that. So that's the outside long term. The inside long term is, if you have a nursery, you can go to 2025. If you have 20,000 square feet or less, you can go to 2025. If you're over that, you're really on a very short pathway, because the renewals for provisionals are no longer possible over 20,000 square feet. I think the state it tried to give a little leniency, which is if you've made significant progress on your secret compliance, they allowed you to renew that. I wouldn't expect to see that on the next renewal. So, I think that clock is definitely ticking. And, they're all going to be gone by 2025. So you can set that as,
no. And one of the things,
or it's going to be out of the market.
And I just don't think people understand just how brutal of a law CEQA is, the California Environmental Quality Act, how it's been weaponized by communities and by people who don't want anything built. The example I give is them fighting housing that's desperately needed by Berkeley for students, and they use CEQA to claim, it's true, but they use CEQA to claim that students were noise polluters. And I even heard from a private cultivator that they had to hire a marine biologist for 6 months to come onto the site while they constructed to look for snails. Look for snails that no longer exist in nearby creek beds that they did not disturb, and the cost was like a couple $2 million. I mean, it's laughable. I mean, we read these stories and we hear about them, but I don't think people fully appreciate just how arduous a task, how expensive it is to be fully compliant with all the rules and regulations.
Yeah, and how many of the cultivation licenses? Go ahead.
Sorry, thanks. We've had some issues with the California Coastline Commission, CEQA. I mean, our Padero facility has a warehouse that we can't even use for cannabis because it's one corner is 5 feet too close to a dry riverbed. A dry riverbed that's so. Couple that with the fact that Graham and I grew up swimming in the ocean and appreciate clean water and heal the bay and all that. But, you know, people can't afford to live in Southern California. And I would point, like you just did, at CEQA and how that's been weaponized. The fact that it's going to get used here, even though investors of ours would say, hey, that's a good thing for Glasshouse. We don't think it's great for the industry as a whole.
No, it's not. Well, it's not great for California. I think there's a way to protect the environment without
100%.
giving people who aren't trying to protect the environment weapons that just fight everything, including housing. And you guys know that I'm like trying my hardest to build housing for those experiencing homelessness. And you got to figure out all these wild hacks to try to house people that are on the streets because it's impossible to build anything. And in a weird way, it's like part of the bull case of glass houses. There's literally no way, even if Measure O allowed it, which it doesn't, that you could build your Camarillo or your greenhouses in Santa Barbara County ever again. It's impossible.
No, look, California is a beautiful place, and California has a lot of great things. Again, Graham and I are native from Southern California. We love it here. But when it comes down to this that you're bringing up, it is worthy of note. It is going to affect the industry. I'm hopeful that especially as interstate commerce starts coming, and it's not if, it's when, we want more capacity of California flower leaving the state heading towards the world. And the only way to do that is going to be to have some rational legislation rational legislation. We're in favor of that.
Is that an oxymoron?
Yeah.
Hey, I'm also against unfair taxation.
Yeah, definitely.
Did you want anything to add, Graham, or was that good?
I was just going to say, I think one thing people may not fully appreciate too is just how many licenses still are in this provision or at risk, basically, right? So, if you look at California, it's something like 40% of the cultivation licenses across all the categories are provisional licenses. So every single one of those is at risk on a ticking clock with a definitive end in sight. And, again, if you've been working on this for half a decade, right? The question is, do the next few months solve that for you? And I think for many of those, the answer will be no.
Now, there was some negative news in the second quarter that you were sued by another California operator who claims that you're selling into the illicit market. There were a lot of questions when I asked people on Twitter, like, hey, what questions should I ask about the glass house that have been worried about this? I know you have countersued that operator. I don't want to give my own personal opinions, but I wanted to just give you an opportunity. I know you can't comment on the lawsuit. I'm not interested in the lawsuit. I'm more interested in maybe in you discussing how you sell, who you sell to, or the process so that investors may gain comfort or at least hear from you on how you conduct yourselves.
So what I would say about that, Aaron, is this. We hired excellent lawyers that know this law very well. And we don't spend, to accomplish results we don't spend time talking about it. I blocked all my social media channels, so I don't even know what's being said. Again, off to the lawyers, let them deal with it. So no real comment on that, just because it's a waste of time. And then when it comes to legislation, we don't spend any time really doing it on the internet, because that's just it's a waste of time.
Yeah.
When it comes down to who Glasshouse is, I would tell you that being a publicly traded company in 2 countries, where we are audited for 2 countries, and also Yeah, that's right, for 5 years. And I would just say, people can believe what they want, but we are one of the largest companies and largest market in the world in a very regulated market. So that's really, you know, people can, they can throw nonsense all people want to do, but to us, to sit there and respond to nonsense is a waste of our time. And you know, and by the way, you do know that we host people at our farms all the time. We do stuff wide open. We're as transparent as you can really be here in California. And that's pretty much all I have to say about that.
So Aaron, I just want to add one other, you know, and Kyle mentioned it, but is a public company, there is an extremely high level of scrutiny with all of our transactions, and our auditors are very, very focused, like, of the areas they focus in on, understanding revenue and revenue recognition and understanding cash and cash transactions are among their most intense areas of focus. And, you know, typically as part of the audit, they will trace invoices all the way back through, did we get the cash? How did we get the payment? So I just, as a public company, we go through an intense level of scrutiny. And, you know, we deal with MGO as our audit firm, and they have lots of cannabis experience. They're highly reputable. So people just need to understand that as being a public company, we have a very high standard for reporting.
And by the way, all this stuff in this industry, the lawsuits, it really does make us look like amateur hour out here. And there are some folks in society, Donald Trump, he uses lawsuits as a tool for business. And that's just, you know, you do a LexisNexis of the people on here. That's just not what we do. To us, it's a distraction. And that's why when I told you, when we made the conscious effort, if we were going to enter litigation, hand it over to lawyers, stop talking about it, let them do their job, and we'll deal with it when it's time to deal with it. But really and truly, let's, you know, the focus needs to be on building the business. And as Mark said, a little bit of common sense. I think, you know, get your popcorn out later when it's time. In the meantime, use some common sense.
Yeah. And so if I just go ahead,
it really is a bummer to see like how silly, you know, think about the true foes that we have, right? Big pharma, politicians who like the, you know, existing status quo, and the industry, rather than banding together and realizing that, you know, 98% of all these topics we agree on is acting like, you know, crowded rats in a cage trying to eat its own tail, rather than working together against the true common enemies. I mean, you got to imagine that the lobbyists for the pharma guys and the lobbyists trying to prevent change in Washington, like, have to be laughing. And we look like toddlers in a sandbox over here, suing each other, arguing about stuff, silly crap on Instagram. Like, there's not great. We're happy with the, you know, let's keep it just the way it is. People in jail, prison industrial complex, you know, weed's illegal, sell the pharma drugs. Who do you want to, this is what you want to bring from California to the rest of the country? This is what you want to legalize, right? I mean, I think it's a real net negative for the entire industry. And it's, as Kyle mentioned, hand it to the lawyers. We focus on our operations, but it is still sad to see the way that it, you know, the light that it casts. I'm sure Kevin Sabat at SAM and Smart Approaches to Marijuana just salivates at this silliness. And given, you know, guys like that, any ammo is a real number. So.
And the other is, we just want to amplify nonsense and clowns. Just there's going to be a time and a place where that gets dealt with appropriately. And it certainly for us is not worth any time. And it certainly isn't going to be on Instagram, because we're not being an Instagram diva is not our goals.
Yeah. So if I just back up for a second and I think about, I mean, the way I've thought about it, there's this, you know, you mentioned rat in a cage. I've thought of it as like a scarcity mindset, is that you have a lot of companies, a lot of people suffering. They see one company that's doing something very different that is somehow succeeding. And this, you know, I'm just curious to how you think about it from other companies who are competitors for other, especially I think about limited license markets and investors who see a scale California. I would personally be scared as an investor or a business in that. And there are a lot of parties that would love for Glasshouse not to do well. How do you think about, as you kind of pull away, a target being on your back, so to speak?
You know,
how do you think about that?
You know, you're a Georgia Bulldog fan. A lot of haters on Georgia football, 2 national championships in a row. I think USC football has dealt with that. The Dodgers have dealt with it. I think we look at it as there's going to be lots and lots of winners in cannabis. I don't think we're going to be the only, winning company in cannabis. I think we just focus in on doing what we can control, do the best we can. When it comes to the broader market, when I hear, discussions of MSOs, and we have a lot of friends that are executives at the other MSOs, and we cheer. I mean, by the way, we don't talk shit about our competitors. That's not our way. Even privately, we do not talk smack about it. Do we hear rumors about this and that out there? We do. We don't repeat them. We don't think that's untoward. So, but the MSOs are playing a different game than we're playing. We have focused in on providing cohibas from Cuba. We think this is the appellation, this is the place, this is where agriculture should happen. We think we can do it cheaper and better than anybody else. And we think at the end of the day, that's going to matter. And, do we think that, at least I'm going to speak for Kyle, do I think that cannabis, when it becomes descheduled, rescheduled in the future, do I think it's only sold at dispensaries and it's limited licensed? Not a chance, like 0 chance. So, I think what we're doing is we're building for tomorrow. We certainly can play in today, but if we started going to a bunch of other states, that becomes liabilities for tomorrow. Right now, I don't think we have any real liabilities for tomorrow.
Yeah, I mean, I think you got it just right. It's a scarcity mindset. I'm maybe a compulsive collaborator, and then I think it would be so much better that if we as an industry were working together, ignore the 2% where we disagree with each other, focus on the 98% where we do, and work on growing the pie, right? I mean, particularly the other operators in California, we think California cannabis is the winner. We're not trying to put anybody out of business. We're not trying to crash the prices. We think there's 1,000 right ways to do cannabis. Everybody can have a lane. There's going to be, as Kyle said, there's going to be lots of winners out there. If it's Fig Farms doing some of the best indoor, if it's the folks doing mass scale outdoor, if it's the guys in NorCal doing living soil, regenerative ag growing small batch craft, like every single one of those things works for the right consumer and the right demographic and operated well. And we would be much happier to be working with those folks to open up interstate commerce, farmers markets, direct to consumer. None of those things are home grow. We support all of it because we think the industry, as it grows, has plenty of room for everybody. If it was up to me, Graham, our energy would be focused on how do we work together to make this pie as big as possible, not how do we fight over the current crumbs that exist.
And one thing you mentioned, Aaron, you said there's 2 things you said. You brought up litigation, but you also brought up raising money. And I will tell you, that didn't even come up. So investors with money, they're well in the know, everything's out there, and it didn't even come up. So I just want to make sure we're clear.
Yeah.
That's a waste of time.
Yeah.
And by the way, when it comes down to the rest of the industry, right now I'm helping a distressed company raise money, not from Kyle, but more as a consultant, because I'm cheering for others and they do somewhat compete with us. But when I'm asked to try and help other good folk in the industry, I'm always happy to help. And we have good relationships with people up in the Emerald Triangle, not everybody, but a lot. And so Graham and I do what we can to help collaborate. There's not going to be just one winner. This California is going to be cannabis central, and we just need to help everybody survive. And so we're humbled in our good fortune, but we want to help others. And so we've been actually quietly pushing to help the Emerald Triangle get an appellation law around the country. around the state so that they get that appellation. So there's things, and that doesn't help us in any way. We just think it's better for the industry.
Yeah, that's great. Shifting to interstate commerce obviously would help all of California. I think it's one of the main reasons cannabis is broken in this country is that you shouldn't be growing it. Where you're growing it, you're forcing companies and the social equity and all these people into farming, which is one of the art. It's about scale. It's about technology. It's totally insane what we're doing. But
Right.
we're due to hear for Rob Bonta. I was hoping to hear in January, the California Cannabis Department said, "Hey, Rob Bonta, can you rule on interstate commerce?" Have you heard anything on when we may hear from the California Attorney General and when California itself might try to enter into interstate commerce pacts?
I mean, I think I've probably heard the same things you do, which is kind of expected any day now. I think, the DCC, Matt Lee, and the attorneys who wrote the request, they put together a great 8-page argument that didn't even mention some of the very strong things out there, like dormant commerce clause and things like that. They kept it even cleaner than that. I don't think they were writing those 8 pages for Rob Bonta. I think they were mostly writing it for the federal government, the folks over there who would observe on why they should take a, kind of, I'll say, consistent approach to what they do today, which is that they don't mess with operators who are compliant with their state laws. And if you added an S to the end of state and made it states, and you were still compliant with all the states' laws, I'm not sure there's any reason that the DOJ should change their tactic. And I think that's the case they're making. I do think that Rob will come back. I do think he'll be supportive. I know Matt Lee has been out there, who's the head lawyer for the DCC, on behalf of, I assume, the administration, talking with other states and campaigning for why an national market makes sense. It's better for consumers, it's better for producers, it's much better for the environment. So there's lots of good reasons that should happen. I know the governors are out there from many of the West Coast states, but also from the East Coast states, the New Jerseys and the DCs and the Pennsylvanias out there who have interest in being able to import high quality, lower cost cannabis for their constituents and their citizens. So I think there's a lot of reason to be optimistic that things will move there. Again, everything that's happened on legalization has been led by the states. So I would expect that trend to continue. And at the same time, we're also optimistic about the rumors we hear about Javier Becerra and the Health and Human Services having an opinion on the rescheduling or descheduling by the end of the year. Certainly, if you follow the science, cannabis wouldn't even be on the schedule. I think, as Kyle likes to mention, we don't think that cannabis is only going to be sold in dispensaries over the long term. It is safer than both alcohol and tobacco. So any outlet that can be trusted to sell those products should by default be able to be trusted to sell cannabis. And, all of a sudden you could see yourself going from the, 11,000 liquor stores and 77,000 places that you can buy a drink in California in comparison to the 1,000 dispensaries we have, to a very similar number for the places that you could buy cannabis. And you can only imagine that on a national scale, what that would do to the market and the producers and the brands, and how much that would help everybody. So that's certainly the world we're hoping for.
So Kyle, speaking of federal reform, what's your view on federal reform by year end?
I think Graham touched on it. I would tell you that it's highly likely I'll be in DC somewhere in the October range. That's what's being bantied about. We are putting pressure. I believe in December we're going to, if not sooner, but I think by December, Secretary Becerra will likely recommend. We're hoping for descheduling. That's what we're pushing for. But we're also not where Booker and Schumer have been, which is all or nothing, because we think that's just asinine. I would tell you that I think that he's going to recommend probably a rescheduling, unfortunately, but it's still better than where we are today. And then at that point, it's going to get bounced to the DEA and the FDA. The DEA is led by a woman that I would say to everybody, go check her out on her TED Talks about use of prisons. I think it's very interesting. She sounds like I'm optimistic with her. And then the FDA, you just worry about the dark money that comes from, the backers of, the big pharma money. But I do think that there's an election coming. I would probably put this number 10 on the list of what people care about, but it's high enough that I think, and the Democrats haven't moved the needle at all. And I think this would be a good win for them. So I would expect that sometime next year, hopefully descheduling, if not a rescheduling happens. And, the thing that we must, and I would be remiss if I didn't bring this up, Aaron, in every single call, whether it's even a financials call, Joe Biden has been, to this point, awful. He has not released one person. And if you say Brittany Griner, okay, he traded the merchant of death, and I'm glad she's home, for violating Russian law. But the over 2,700 people sitting in federal prison for cannabis, well, we're talking about how much money we can make here and all the other stuff about this business. They're sitting in an awful, awful place, which is federal prison. Awful. And just having a conversation with Luke Scarmazzo, which I would welcome everybody in California. He's out and about. Talk to him, ask him what it's like to be in the United States federal prison. It'll be an eye opener for you. And then remembering he did it for cannabis. So we've got to get these folks out. That is the push. All it takes is 2,700 plus signatures. So we need that to happen. Descheduling would make it harder to put people back in prison or put new people in prison. So, but I'm very optimistic. And I think just as you've been frustrated, I think it's going to happen pretty quick when it happens. And all of a sudden 280E goes away. Is that a plus for everybody? Uplisting likely happens too. Is that a plus? Certainly for the publicly traded companies and those that want to go public, because then you're not trading on minuscule markets. So those things
that's
happen.
great.
And then interstate commerce would likely be a lot easier for the states to work out.
No, that's great. And I just want to applaud just you, Kyle, and Graham, and the whole team at Glass House for what you're trying to do for advocate reform, that you're trying to tell the story, that you're advocating for cannabis prisoners to be released. I know you have a new partnership with Weldon Angelos to help selling a Weldon's flower that will help go back to advocate for prisoners. So it makes me proud as an investor that you're not just talking the talk, but you're actually trying your best to affect change.
So thank you, Aaron. And in regards to reform, which is Weldon's brand, he paid a tremendous price, as you know, for 13 years and was living, when he got the sentence commuted, he was in a hopeless 50-something year sentence. I mean, it's mind-boggling to sit and talk with him about what he dealt with and how normal and as good a person as he is, and same with Luke. So to have this, he's also quite the taste maker, and he likes indoor flower primarily, as do a lot of his friends in the rap game. And so for us to be able to assist Weldon is more than our pleasure. We're honored to do it. He's not only a friend to us, but he's somebody we look up to, and we look forward to assisting him. And we think that a lot of MSOs are going to want to carry his brand, because we will be able to help them put fire in a bag.
That's great. Well, you have been incredibly generous with your time. Thank you so much, as always. I can't wait to put this out to everyone, and it's just really helpful to understand the Glass House story, what you're thinking, and keep up the great work.
Aaron, thank you as always. We enjoy this. This is one of the things we enjoy doing right after our earnings. So thank you for having us on as always, and best to you and your family for the rest of the summer.
Thank you.
Thanks, Aaron.